Our guest does not expect a recession or inflationary pressure due to tariffs. And he is also looking ahead to strong growth in the U.S. economy driven by tech spending. We are joined by Jay Hatfield, founder, CEO, and portfolio manager at Infrastructure Capital Advisors. Jay, great to see you. Always insightful. We always learn something. Start off with that. So you're not looking for a recession from this trade war?
Yes, thanks. It's great to be on, Andrew. So, what really causes recessions is a big decline in investment. And we have had sluggish investment in the U.S. We had negative investment in the fourth quarter, but positive in the first, as the Fed chair pointed out yesterday. But what you see, though, is very strong tech spending, obviously, but big slowdowns in residential and construction. But it's not catastrophic because we do have a shortage of homes in the U.S. So we think we'll have 1% to 2% growth because of those offsetting factors. And you mentioned oil. Everybody wants to talk about tariffs. Nobody seems to care about oil. When oil goes down 20%, it's like a huge tax cut for American consumers, which more than offsets the decline in purchasing power from tariffs. Mm-hmm. So we think those are offsetting factors and will keep the U.S. economy growing at least 1% to 2%.
Now, you have a term in here. You're calling it stagflation. What is that?
Well, what we're really kind of pointing out is what people don't understand is you can only get stagflation when you have skyrocketing energy prices. So it's mind-boggling, but these are the real numbers. During the 70s, oil went up 1,200%.
Wow. So
not 120 or 12, but 1,200. So $3 to $39. So it's like current oil prices going to over $1,000 a barrel. That's what causes stagflation. When oil's coming down by 20, it's the opposite. You have stagdeflation. Also, the money supply is not growing, so that's the best leading indicator of inflation. And also, by the way, inflation's already below target if you correct for shelter, which is 2 years delayed. So we totally don't buy this stagflation thesis. And so somewhat tongue in cheek, we call it stagdeflation.
You're looking for the market to not do much in the next couple of months. However, you expect a summer power rally, and your year-end target for the S&P 500, 6,600?
Yes, correct. So that would be like a normal growth year. As earnings grow 10%. The market started out roughly at 6,000 or was over 6,000 in December. So we don't think it's that bold of a call. We are optimistic, and today's an easier day to say that than yesterday, that all of these three issues, the Fed, tariff policy, and tax policy, because we have this gigantic tax bill moving through Congress, are all going to be resolved by the end of this quarter, and they're going to be positive. So that's why we're comfortable with 6,600. But we do acknowledge there's going to be more volatility, but it's going to be mitigated by the fact that there will be mostly good tariff news. The tax bill's going to happen. It has to happen for the Republicans. The Fed is more problematic. But so if you get a couple of those things resolved, I still think May, June's a tough time for the market. So I don't think we'll get over 6,000 by the end of June, but we do think that everything's fine. And we call this tariff situation a tariff tantrum, at least for the U.S., because we only import 13% of our, economy is imports. I recognize for export countries like Europe and Canada, it's a huge, it's more of an issue. But for the U.S., we're kind of like, with a juggernaut, hard to slow it down with some tariffs, a little bit of tariffs.
You have one stock idea for us, Cheniere, the big LNG exporter, and of course that's the ticker symbol too, LNG. Why do you see upside in Cheniere?
Well, it's just a great business because, as you know, North America has almost free natural gas because it's a waste product or a byproduct really of drilling for oil. So when oil prices are relatively high, like even 60, you just get way too much natural gas produced, has to be exported. Cheniere has two gigantic export facilities. One in Corpus Christi, Texas, is going to be dramatically expanded next year. And we think that when these trade deals get announced, I don't know about the UK, but certainly China, part of it's going to be an agreement to buy US LNG, I would suspect. So that's a little bit of a tailwind where you get, this incremental demand from these trade deals, because that's really one of, North America's best exports is natural gas. And it is North America because it comes down from Canada and then down to the Gulf usually for export.
Jay, thank you very much indeed. Jay Hatfield, founder, CEO, and portfolio manager at Infrastructure Capital Advisors. Coming